I'm going to suggest we begin because we are quorate and there are quite a few people online. Hello. And so it'd probably be a good idea. Sorry, I'll first ask.
Yeah, it's very difficult to find motor control.
Brenda, I'm going to ask for apologies and substitutions and declarations. Well, I'll ask members of the committee for declarations of interest. Any apologies? Thank you. Any declarations of interest among the members who are present?
No.
No? Great. I'm going to suggest, because we have a big chunk to go through in terms of the external auditor and the accounts for 2 years, followed by the governance statement. I'm going to suggest, if that's okay with the rest of you, that we move agenda item 5, which is relatively brief. And I know Catherine has logged on, so I thought it'd be nice to invite her to present it. But I first had just one question for you, Catherine. I know it's marked as restricted in the papers, but I've read times and it doesn't seem to have anything terribly confidential there. So I wonder if you would be amenable to having it in open session. Someone must be pressing on their microphone. There we are. So is that okay? Could you present it briefly now?
Yes, that's absolutely fine. And thank you for your consideration. Yes, absolutely fine for it to be open as well.
So would you like, I mean, it is nice and brief. It's the briefest thing in the entire agenda. Would you like to introduce it briefly, just explain the background? And
yes.
Then the committee will ask you one.
Yes, so as in prior years, due to the size of the internal audit engagement undertaken, BDO were unwilling to offer an overall audit opinion for the work they've undertaken. So that's been the state of affairs for the last few years. The internal audit plan for 23-24 covered data input controls, employee code of conduct. There were also a couple of advisory pieces of work, one on executive pay and the other on strategic fraud risk review. The IT governance paper, which I believe has been doing the rounds of OCC as well as ODS, has yet to be presented to the audit committee, although I could speak briefly to the expected outcome of that. In addition to that, we always ask BDO to advise us of any audits that are taking place in OCC that relate to the ODS control environment. And during the year, there was an accounts receivable audit that fitted in that category. Just to give you just a little briefly a little bit more information regarding the audits. The data input controls audit received a moderate rating with strong controls over the timeliness of data input and ongoing quality control processes. And this was both for QL and Pergo, which is our operational waste system. And there was just one medium level finding relating to absence of a data quality policy. The employee code of conduct received a substantial rating. This audit included staff being surveyed to confirm awareness and content of the employee code of conduct and associated policies. It's probably worth stating that a subsequent whistleblowing review highlighted that improvements were needed to be made around the guidance and recording of conflicts of interest, and that the improvements in that respect are underway. The advisory review on executive pay highlighted the need for improvements to the Remuneration Committee's terms of reference and also the executive pay policy, specifically to ensure that the shareholder agreement is properly reflected in those documents. Essentially, the issue was that the shareholder was not being adequately appraised of decisions that were being made with regards to executive pay. All the non-exec directors, including our OCC representative, are now members of the Remuneration Committee, which obviously immediately improves the oversight that OCC has, and that's a good position to be in while changes to documentation and policies are being addressed by both ODS and the shareholder. The strategic fraud risk review was completed post-year end, and that concluded that our policies and procedures did actually set a coherent framework to identify fraud risk and take action to mitigate those risks. Although the IT governance audit is still in draft, at our last audit committee meeting, I was told that the assurance rating for this would also be moderate, and it was highlighting a need for OCC and ODS to establish a dedicated IT governance committee, and also to ensure full stakeholder involvement in ICT projects. They were the sort of crucial recommendations to be taken forward. During the year, the audit committee has reviewed the status of information assurance in the organisation. The key risks highlighted there were the amount of paper-based information that some teams are using. Specific to the trading business, the risk of employees taking confidential commercial customer information to the competition, specifically when they leave the organisation, and increases in the risk of cyber crime. As highlighted in the report, additional non-internal audit assurance is available in terms of the governance questionnaire that we fill out every year for OCC. We send that round to every service area in the organisation. The external accreditations that we hold that are obviously subject to audit, the work of our quality assurance team who undertake another slew of audits for us, our training and the policies that we have in place, such as whistleblowing, money laundering, etc. So in conclusion, on that basis, I'm happy to provide assurance on behalf of the audit committee and the board on the overall adequacy and effectiveness of our governance, risk management and system of internal control.
Thank you very much, Catherine. I have a couple of questions, but I'll invite committee members first. Simon?
Yeah, on the governance questionnaire, the areas of challenge, are those areas that the heads of service?
Sorry, you cut out then on the questionnaire.
The governance questionnaire?
Yes.
The areas of challenge, are those areas that the heads of service have identified themselves, or is that something you've identified? And are you satisfied that they've got a plan to address those areas of challenge?
Yes, the answer to your first question is yes, they are areas that have been identified by the service areas themselves. Some of those, I guess, are observational, for example, compliance with AWAB's law, for example. I think they were really saying there that the time limits and the enforcement powers under the Social Housing Regulation Act are issues for them. But yes, where the audit committee thought that more follow-up was required, we did take action to make further inquiries in this respect.
Thank you very much. Any other? Andrew?
Yes, thanks very much, Chair. Yes, I just wanted to understand the very first statement that you referred to there about the unwillingness to offer an overall audit opinion. Forgive me if I'm not familiar with technical definitions here, but I wonder why not, and what hasn't been included that would have been included if you had offered an overall opinion.
Yes, the issue here is, given the size of the organisation, we don't have effectively the resources, or we don't make available the resources for internal audit to look through every single area of internal control, which is why my comment about where there are processes that run across the two organisations, then linking and making sure that we're aware of OCC's audits is quite important. I mean, essentially, it comes down to the size of the organisation, the fact that we don't have internal audit crawling over every area of the business. What we do however, is a very much a risk-based approach to the audit. So we look at our highest levels and our strategic risks, and we make sure that the audits that we do request are covering those risk areas, and also that we're looking on a sort of 3-year basis, looking ahead. Everything is risk-based, and making sure that periodically certain areas are repeated, in particular if there are any findings of concern from prior audits.
Since we have, I know this is unfair because Gurpreet, I don't think, worked on this, but do you have any comment from the BDO side?
Yeah, so just on the point that's been raised here, so it is BDO who do the internal audit for the companies. I oversee the process and act as the head of internal audit for the City Council, and it is a separate team. We've done that deliberately to avoid any blurring, and because there were some challenges, particularly in the early years, of working across both. But in answer to Councillor's question specifically, historically, that's what we have done, because especially when the audit plan first started, there were only a few reviews in the plan, and per the internal audit standards that we have to comply with, we have to give an opinion on governance, risk and control. And if you don't cover each one of those areas, it's hard to give an opinion without it being heavily caveated. So it's valuable for us to do reviews in an internal audit manner, but to the City Council, we do give an overall opinion. And if there was something material within the companies, we would say that in the City Council annual opinion, which this committee receives. That all being said, now that these plans have evolved, and I haven't, and my colleagues haven't had this conversation with Catherine, so I can't say this, if we were working with the authority in future years, that is probably something we could look back at and reconsider now that the plan is more established, and obviously we're doing more reviews, and as it continues to grow, have we reached that tipping point where we may issue that opinion? So I'm more than happy if we were working with all organisations in future years for that to be considered and discuss that with my colleagues. But at this stage, the position that Catherine has outlined is the position we currently have, but that doesn't mean it always has to be the case.
May I suggest, therefore, we make a recommendation that, not now, but it sounds from what Gurpreet says and what you've said, Catherine, that this committee would recommend that there are discussions maybe over the next year. I don't know what's a sensible time period for looking at finally doing a comprehensive audit of and governance and risk, and everything would then be covered at that time. That would seem something worth striving towards. And from what you've said, Gurpreet, it sounds as if you're gradually getting there de facto, yes?
Yes, yeah. Yes.
I think that's fair, because obviously as the years go past, there's more areas of the business that have actually been looked at. So yeah.
Just say I'd be very happy to second that recommendation. I see everyone's got a hand up.
Yeah, if I may, Chair, just to provide a little bit of context. The new Chair, Kath Robinson, and I are working on a governance review at the moment in terms of the first couple of stages of the company, which starts out looking at the Articles of Association and the shareholder agreement, as well as some of the other things that ODS have been managing off the back of some of the things that Catherine's touched about. So governance is going to be looked at not only by ODS but with OCC, so we're working together, and that is also going to be going through shareholder as well.
Thank you very much. Any other questions, Lois?
Thank you, Chair. Thank you, Catherine, for presenting the report. I note your comment about, you said there's a need for a new IT governance committee, and I just wondered how does that happen? What's the process for making that happen?
As I said, we haven't actually seen the full report here, but I would expect that this is a committee that would run across OCC and ODS.
Thank you. I mean, that maybe allows me to ask a question. You have said under governance and risk management assurance, you say that, I'm interested, QL is proving to be a good tool, given how often QL has come up in past meetings. Is that the state of affairs now? It has settled down and it is working effectively. Is that correct?
I'm very pleased to say that, yes, that is correct.
I'm delighted.
So am I.
I had just one further question, if I may. You talk about the BDO fraud audit. I mean, as you know, within the council, we have a very successful investigations team, which in a couple of weeks is going to have an incredibly successful conference again. And I just wondered, do you coordinate with them on fraud investigations, fraud prevention, and so on? I imagine you do, but it's not mentioned here.
Yes, there is. I mean, one of the key things we've been interested in is really getting alerts of the most up-to-date frauds that are going round. In my experience, whenever something has happened in in your own organisation, or in this case, an organisation that you're associated with, whether a fraud was actually perpetrated or there was an attempt, whether it was phishing or whatever, it's kind of in the communication with your teams. It's always very useful if you can point at real life examples. I think it brings it home to you, and I've been told that the OCC and ODS teams are talking to each other with regards to that. The additional source of information that we have on frauds, we've actually asked BDO in their sector update that they provide us at each audit committee meeting. They are now adding information on frauds that have taken place, whether they're in our sector or not. It's just useful to see what's happening elsewhere, and then to ask the question of the team, would the same thing happen to us, or do we have adequate controls in place to prevent it?
Thank you very much. Nigel is ultimately the overseer of the investigations team. Over to you, Nigel.
Yeah, no, just to add to what Catherine said, basically the fraud team basically have undertaken quite some detailed work with ODS colleagues, especially the building works area, in terms of fraud awareness, basically, given the amount of access that that team has to council properties. So I believe that's gone down a storm in ODS. So yeah, there is quite a lot of collaboration basically in terms of the expertise that my team can bring to ODS.
Thank you very much. Seeing no more questions, I must thank you very much for joining us, Catherine. And I see that we're required at the end to note your report, which I'm sure we're all very glad to do. So thank you very much indeed. Thanks a lot.
Thank you.
Okay, let's now return to the order in the agenda, and we'll start, I'm not sure whether Nigel will actually introduce or whether Bill will just kick off straight away. I think Bill will go straight away to you to introduce this rather large item. Thank you.
Thank you, Chair. Yes, as you say, it's a rather large item, because this is actually picking up a number of different years. And taking those in order, we've got the 2021 year where the accounts had actually been signed off, but the audit certificate hadn't actually been delivered to us. That's because of delays in whole of government accounts. So it's a bit of a formality, really, but it does need to be brought to Audit and Governance Committee, having just received this year the certificate for that year. The other part is on the accounts which haven't been fully audited for 21-2 and 22-3. That's why obviously the agenda is so big, is that it contains both of those sets of accounts. As audit committee is probably aware, there have been delays across the sector in local authority audits, and this is sort of partially in some authorities been caused by issues at the authorities themselves, but generally across the board, there have been kind of capacity issues at the audit level as well, the auditors, with the number of firms and the number of people who are actually involved in the audits. So that means that although our 21-2 audit, we'd got quite a long way through it, it didn't actually get completed when the government decided that what they're going to do is actually put in some measures in order to effectively do a catch up on all of the outstanding audits. So what we have now is a position where any of the open audits up to and including 22-23, and for us it's only 2 sets of accounts, for other authorities it could well be more, all of those accounts are going to be subject to audit disclaimer. What an audit disclaimer means is that the auditors haven't actually looked at the accounts in enough detail to be able to give a full opinion. The knock-on effect of that is that there's then going to be an effect on 23-4 in that those accounts will be disclaimed because of the brought forward figures. The comparative figures won't have been audited, and there will be a lesser impact on subsequent years after that. So these 2 sets of statements of accounts have been out to public consultation, public scrutiny. So they've gone through the all of the steps needed for auditors to actually issue a disclaimed opinion on them, apart from being approved by Audit and Governance Committee for signing off. So that's why they're here. Now, the actual report is actually asking for delegated authority to the chair of Audit and Governance Committee to actually sign these. And that's because of the timing of getting it all finalised at the external audit level. It doesn't actually tie up nicely with an Audit and Governance Committee, and we'll need to move quite quickly once the auditors are in a position that they can actually issue their disclaimer. Because the consequence of not signing them off is that effectively the authority ends up on a naughty step. There is a deadline for getting these signed off in December, which really we don't want to go past. Now, the other aspect of this is actually the general kind of catch up in local authority audit. And in order to do this, what the government has put in place are some what's called backstop dates. And so the 23-4 year, for instance, the backstop date is in February of 25. And then years after that, the date will be brought back further and further until we get onto a more normal position in a few years' time. So I think that's really all I need to say about the actual report. The only thing is I would draw attention to the Appendix 2, which actually does go into a bit more detail of this, what's termed rebuilding assurance. And that sort of talks about what the different stages are of kind of bringing accounts back in to being able to give a normal audit opinion. So since it's a disclaimed audit opinion, I'm not intended to go through the accounts in a lot of detail. Obviously, we will take questions on them. But bear with me because they're quite old accounts and I'm working on 23-4 at the moment. So I will answer any questions that I can. But I think really it's probably over to yourselves to ask me questions on it.
Thank you very much indeed. I thought that was a lovely and succinct description of a complicated state of affairs. And the committee should note, as Bill implied, we are required, and there's a form of words in the recommendation, that if we approve these statements of accounts, then we can proceed, I on behalf of the committee and Bill, to sign it off so that this then can be forwarded by the December deadline. So it is quite important. We are going to have EY coming under agenda items 6 and 7 later. But I just wonder if Adrian, who is listening in from EY, did you have anything to say at this point? Because it sounds to me as if this is more a question maybe for clarification of certain things by the committee in terms of the accounts with the disclaimers already there. And then we can maybe ask you more specific questions later. But do you have anything to say right now, Adrian?
No, I think Chair Bill kind of did a really, as you said, a nice succinct job, and actually was actually quite a complex area. And I know we've been in the last couple of years through the committee, we've been kind of constantly giving you updates. I think we're now at the point where all of us can now see a way forward to actually kind of moving on to forward look audits and none of the kind of reviews going back, looking at accounts, and obviously giving you more up-to-date reviews rather than kind of looking back a couple of years. So actually nothing further to add at this stage. I think, as I said, Bill kind of summed up really nicely, and I think it's just for the committee to kind of consider the accounts and also the immediacy, I suppose, of the backstop date, which is coming up in mid-December. And just obviously, if you have any questions, I'll be happy to answer those in conjunction with Bill.
Thank you very much indeed. Now, I'm going to suggest, I don't know how many questions members of the committee have, but I suspect some may be quite specific to particular points, but I would welcome first questions which are more general, sort of almost points of principle and the like, and then we can go to very specific ones, which if we don't have much time, I would suggest maybe covered in emails offline, if it's just the interpretation of a particular point that is made by in these large papers. But you have your hand up, Simon.
So I think you seem to be saying that we have to sign these, but what could go wrong? What could be wrong about them that we've signed?
Bill, what could go wrong?
What could go wrong? Well, these accounts have been reviewed by Nigel Kennedy. They've been reviewed by myself before they get to Nigel. We're confident of the actual position that's stated in here. Normally, when we go through an audit, there tends to be some reclassification on notes often. We don't tend to get any kind of real major changes at audit. So as much as I can, I would give you assurance that there isn't anything actually fundamentally wrong within these accounts.
Anna.
If that answers your question, hopefully.
Okay, so yeah, I have a general question about both years' accounts, which is why OCHLI is not treated separately, because it often is elsewhere in things like shareholders, whereas it's all just lumped in together as OCHL. So I was wondering why that distinction was not made, just because it is, maybe this is a new thing, but I wasn't sure.
Bill?
Well, as far as the council's accounts are concerned, we consolidate in at the group level. So the structure of the housing companies is such that there's a holding company, and then underneath that there's the investment company and the development company. So those accounts in themselves are then consolidated into one set of consolidated group accounts that we then will consolidate into our accounts. So as far as our accounts are concerned, we're looking at the overall housing group rather than the individual entities.
Okay, that does make sense, because I think ODS does have two still, but yeah.
Yeah, if I can come back on that, yes, that's because ODS and ODST are separate entities and don't have a holding company above them. So it's a slightly different structure. Yeah, the council wholly owns the housing holding company, and it wholly owns ODS and wholly owns ODST. So hence there's a slightly different treatment between them.
Lovely, thank you.
That's good. Andrew?
Yeah, thanks very much, Bill. Just following up Simon's point, Councillor Ortino's point about the risk. I mean, paragraph 13 of the report starts by saying there is no real impact on the council, but there could potentially be an impact on the companies. And it then goes on to explain what that is. The reasons for disclaimers have been well publicised, not due to the specific failures of the individual authorities, would mitigate the risk to an extent. I was a bit nervous when I read those words, to an extent. Also, you know, we've essentially been told we have to sign off the accounts. You know, we are the Audit and Governance Committee, and we're being told we have to sign off accounts that haven't actually been audited. You know, I'm not an expert, but I am a councillor, and it is my job to make sure what I'm being asked to do is reasonable on behalf of the council and the population of Oxford. And that makes me a little bit nervous. There is also a bit of a difference of emphasis about what a disclaimed opinion means between the officer report and some of the supporting documentation. And paragraph 2 of the officer report explains the reasons for the delays. The key one being the evidence around grants during the COVID period, grants being issued in a particular way, we all understand that. But it then says the administration, there were then further delays in 2021-22, caused by some data issues arising from a computer system implementation, which presumably is our old friend QL. So it's not entirely, you know, not our fault, if you want to put it like that. Also, if you then look into the backlog guide, which was a very helpful and very clear document, the way it describes what a disclaimed opinion is, again, uses rather different emphasis and different kinds of language. On page 18 of the agenda there, paragraph 16, disclaimed opinion, auditor is unable to obtain sufficient evidence to conclude on whether the financial statements are materially misstated. It's not saying they are, but it is saying we don't know that they aren't. And paragraph 20, it is unlikely that the auditor will be able to obtain sufficient evidence to conclude they have reasonable assurance over the in-year income, expenditure, cash flow and reserves movement. So we are being asked to take quite a lot of trust here.
Over to Nigel this time.
Could I just pick up the first bit about the trust? At the end of the day, it's your council's chief financial officer, i.e. me, basically, telling or saying this is a true and fair view, basically, of the accounts as at the end of these financial years, basically. So in terms of the trust, basically, you are relying on me basically saying that this is a true and fair view. I mean, clearly, in terms of the work that hasn't been done, auditors come in and often say they spend more time checking the accounts than we do putting it together. That's just the way the audit works, basically. And clearly, sort of thing, in these two cases, that work hasn't been done, basically. But to the best of my ability, and you are relying on me, basically, as the council's chief financial officer, saying that these accounts represent true and fair view. And I am confident in the work that Bill and the finance team have done in order for me to sit before you, basically, and say and give that opinion, basically. So that's where the reliance is coming from, in the absence of the auditors having done many months of checking, which they are currently doing on the 23-4 accounts, actually. So just to answer that one, I mean, perhaps Bill, do you want to pick up the other issues regarding the other questions regarding perhaps the grants?
Yes, so I agree. The issues weren't entirely out of our control as such. But because there were delays relating to those particular issues, it then led into to these accounts being the 21-2 accounts being included as part of the disclaimed accounts because of the audit being stopped because of the actions at central government level in order to bring local authority audits actually up to date. So really the report is just explaining what the position is rather than trying to make an excuse for it. The other issue, the other question really was around the disclaimed accounts. Yes, what's in the backup documents is slightly different because a disclaimed opinion is normally not a good thing, because the auditor either has had information withheld from them, or indeed management in some way has blocked the auditor from completing all of the work. Now, this is not the case in the case of the 21-2 and the 22-3 accounts. It is a national thing that all local authorities with any backlog are being required to do. So we don't actually have a choice over getting audit in order to look at the accounts. We're in a position that they are going to be disclaimed, or we're going to end up on a list of authorities that actually haven't got these past the auditor.
Nigel.
Yeah, and I suppose just to elaborate, I think the report picks up basically. I mean, normally, if disclaimed opinions are given on the accounts, basically in their private sector context, then that would be a red warning, basically, to anybody that wishes to invest in that company, wishes to do business with that company, etc. But I think, as Bill's explained, basically, it is well known and documented of the issues that local government have in respect of external auditing, and they're widely publicised, actually. I think I was saying to the chair earlier on, there were about a month or so ago, there were almost 2,000 sets of accounts in local authorities up to and including 22-3 that had not been signed off, basically. The whole industry needed to be brought back up to speed, and that is the reason for the backstop dates. In respect of the problems that it could cause, hopefully none at all, basically. But there is a potential that if ODS are doing business with external companies and are saying that they have a parent as Oxford City Council, an external company may view our accounts and say, is there a problem here? If they're tuned into the industry and they're tuned into what local authorities are going through, basically, they will hopefully, and read the reports, they will hopefully conclude that there isn't a problem here. Basically, it is essentially because we need to hit these backstop dates that have been imposed on us, basically, in order to get our accounts over the line and basically move on.
Actually, the first question I wrote here is very relevant to what you said. I said, what is the practical impact of the disclaimers on the City Council and ODS? I mean, do we know whether our risk rating, our credit rating, or their credit rating has in any way been affected by this? Is there any evidence that these disclaimers are to our collective disadvantage?
I mean, I say essentially, we don't have a separate credit rating as a local authority. Actually, essentially, we default to the government. Actually, I'm not aware that there are any instances where ODS have been turned down business because someone's looked at our accounts basically and said, you know, that doesn't give me any confidence whatsoever. So I'm not aware of any of that actually. So no, I suppose the answer to the question.
Thank you. Other questions from committee members?
No, just a comment, Andrew, really, thank you, Chair, which was that when I talked to Nigel about this exactly before the meeting, I had an analogy that's a bit like signing for a parcel, sight unseen, because that's what we're doing. We're kind of saying, yes, we know, but we don't have enough information to say that, you know, these are definitely okay. But as Nigel and Bill have said, we kind of have no choice, because otherwise, if we don't do it by the 13th of December, then we will get, you know, a bad mark. So it feels to me like an administrative formality in terms of the disclaimed accounts.
Andrew.
Well, indeed, through you, Chair, that does appear to be the case, which kind of makes me wonder what we're doing here. You know, we are the Audit and Governance Committee. That is why we've given up our evening to be here. I mean, it's like this is outside our remit, but I do wonder whether government or somebody, you know, could have invented another category of opinion that was not disclaimer, which was just basically haven't finished yet. But there we go.
Yes.
Hopefully we've got confidence in our officers and they're saying that they're accurate, and I'm only new here, but I get the impression that you do have confidence in them. So
yes,
that gives me some confidence.
Another question, yes,
Oh, yeah.
Lois.
Sorry, is it time to ask a specific question? Or
Okay, let's stick. Are there any more general questions? There is one actually, which I had, about measures to clear the backlog. It refers to the government, and I assume it's this government now, has announced its intention to overhaul the local audit system with a further update in autumn this year. Do we have any news at all? Has that yet been announced?
No, I have no further update at the moment.
Thanks very much. So as long as they're not very small specific questions, then please proceed.
Thank you, Chair. Thank you, Bill. Just a question in one of the appendices, well, in Appendix 5 and 6 on this report, the letter of representation, number I, item I at the end of that, which is on page 364 in our papers, says what information is included in I. It's about climate. It says all information, recognition, I can't read, about, can't read my own writing, disclosure of climate related matters. I couldn't understand from that description of I as to, it says that we have found out all of this information to do with risk, to do with climate matters, but it doesn't say what that is. So I just wondered if you'd give me some more information about what kind of information is that?
What that is just that we've disclosed everything to the auditors previously. As it says about recognition and measurement. So predominantly that would be around any adverse effects on things like property values, etc. It's not referring to the sort of general kind of climate measures. It's anything that is specific that would affect the statements of accounts and the figures therein. So all we're saying is we haven't withheld anything from the auditors, basically.
Yes, thank you. Perhaps I can email you after this because I'm just interested as to what that information, what specific information that is. But I'll email you later.
Okay.
Andrew.
Perhaps I could just ask your guidance, Chair, about, to what extent there's substance in interrogating the accounts themselves. I mean, this is not the Budget Scrutiny Committee, but I'm not on that. I'm sort of new to this. So tell me if I'm sort of exceeding the jurisdiction of this committee here. But just comparing performance between these two sets of accounts in some specific areas, the housing revenue account on page 119 appears to show a surplus of 2 million in 2021, a deficit of 8 million in 21-22. And then if you turn to page 287 of the agenda, a deficit of 111 million in 22-23, which appears to be mostly accounted for by 125 million of depreciation and impairment of non-current assets. I'm not sure what that is. Have I read those figures correctly?
Is there a decimal point wrong or something? I mean, we will discuss this in the budget panel, I'm sure.
So I'm just trying to find where we are.
Is that hair running now?
Okay. Yes. So the surplus deficit on HRA services, there are big fluctuations on here because predominantly around capital costs. So where there's depreciation or revaluations, what you actually need to look at is that in conjunction with the movement on the HRA statement, where you'll then see further adjustments that happen below the line to show the actual impact on rents. I think what this comes down to is the way that local authority accounts differ from private sector accounts. And I have been talking to Nigel previously about doing some training on this sort of area, on the way that the accounts are put together. So I think it's probably a situation where that's needed really, rather than anything else. All I can say is that there's nothing to be concerned about with those massive fluctuations. It's just a nuance of the way that we have to actually present the accounts.
Okay.
May I suggest take up your recommendation? I mean, we are meant to do a training session, but you've now hit on something very tangible. Nigel, yeah.
Yeah, I mean, it's something myself and Bill talked about, and I believe we talked to yourself as well, Chair, about doing a specific training session on statement of accounts. I think, to be fair, probably we got somewhat overtaken by having to present and pull together two sets of accounts basically in a very short space of time, actually. So I think it's something, Bill, at the risk of him kicking me under the table, basically, that we can possibly do for 23-4 sets of accounts, so that we do a pre-training with members of this committee and anybody else that wants to come along, basically, and run through some of the terms, some of the things that you're picking up, basically, and in time for the sign off of the 23-4 set of accounts, basically. So I can offer that.
I mean, you're the one being offered up to us, Bill.
Indeed.
Is that okay?
Yeah, I mean, it's something that really probably we ought to do on a fairly regular basis, and with one thing or another, it's sort of lapsed, with the sort of delays in the statements themselves, etc. So I think it's definitely good practice, and especially because local authorities, the accounting for them as far as the income and expenditure statement is kind of in line with private sector organisations, but it doesn't align with the way that local authorities are actually financed through legislation. So it makes local authority accounts more complicated than the standard set of accounts, and I think it's perfectly understandable that people don't entirely understand it, and I think, yes, training would be advantageous.
Thank you.
If I may, Chair, I'm more than willing to accept that I don't understand the accounts fully, and that any training would be very gratefully received. Having said that, again, if I've read these correctly, that does appear to show, you know, that this particular line, budget line, has jumped by £100 million in 1 year. Why?
If I could come back on that level of detail, please, rather, because as I say, these are older sets of accounts, so I haven't got all of the figures that have gone into that to hand.
Maybe you could just make a note of this question. It's
Yeah.
I wondered therefore whether the decimal or something had moved, but if not, I mean, I'm sure, as you say, the bottom line seems okay. So maybe you could draft a short note which will be circulated among the people present today, and that would
Yeah.
be greatly received.
Will do.
In a somewhat similar vein, may I actually ask one question? If you look at contingencies and provisions, I can somewhat understand that you're taking a very risk-averse approach and looking at the worst possible outcome. But for example, in terms of NNDR, basically business rate appeals, you're still allowing the full nearly 5 million as a contingency. And then against council tax court costs, you're assuming we don't recoup any of that. In the case of the rent deposit scheme, we do actually recoup, I think it's 15%. That is the assumption. In that case, I assume it's based on previous experience, but it does seem a rather bleak assumption that you're making. Is this based on experience?
Yes, Chair. Yeah, it's based on experience and a prudent assessment of collectability of debt.
Thank you. That was nice and easy. Any other questions from members of the committee? In which case, I think you did a wonderful job, Bill. Thank you very much. We will await your inspiration to explain where the 100 million suddenly appeared. And if you draft a note, then I'm sure we'd appreciate it. I mean, and I was going to pursue the recommendation, which I see from nods and so on, was accepted, that we should have training for the 23-24 accounts before they are pulled together, so we can understand what's happening. Go on, please.
Sorry, Chair, to jump in again, but again, just picking up a small detail, if I may. I wonder if you could just confirm again that I've read this right, that ODSTL did not declare a dividend in any of the years being reported, and ODSL did not declare a dividend in the first year, but did in the second, and also that Barton LLP and Oxford LLP both declared a loss for the 2 years.
Yes, in answer to your question, basically, the ODS didn't declare any dividend in any of those 2 years, but in 23-24, they declared a dividend of just over 4 million, I believe. So that was almost catch up, basically. I mean, again, dare I say, it goes back to the system problems that were experienced, and ODS having clear line of sight in terms of their financial position. So that was sorted out in 23-4, basically.
Thank you. So, seeing no more hands, can we see, I don't know if you've got it on your screens, but on my paper, the recommendation, besides the good suggestion of training and the note that Bill will prepare to explain why in HRA it bounces around so much, the numbers. The recommendation we're asked to approve is to receive the auditor's certificate. I'll do it for the 2 years. Consider the local audit backlog rebuilding assurance guide, approve the statement of accounts for 21-22, do it also for 22-23, and then authorize Nigel as head of financial services, Section 151 officer, and me as chair of the committee to sign the accounts, which will incorporate, as they put it, any emerging non-material changes that might arise, and then approve the letter of representations for the 2 years and enable it to be signed before the magic date of December the 13th. Do you want to add anything?
Sorry, I'm being awfully pedantic.
No, go
You'll
on.
forgive me, but I think I heard you say that recommendation A was to receive the auditor's certificate for the 2 years. If I read it rightly, that's.
No, it's only the 1 year.
But it's 2021,
Yes,
so it's
yes.
neither of the 2 years for which we are also agreeing the accounts. That's right, isn't it?
Yes, yes, I had my microphone on. No, I thought it was going to be repeated word for word later. Yes, it is only the first year, yeah. Thank you. With that one very important change, we approve what is the recommendation here, plus the one about giving us insight into this wonderful world. And that's great. Thank you very much, Bill. I think you're staying around, but
Yes.
we will now proceed with Emma, who I know is online, for the annual governance statement, which, by way of introduction, I've always thought if someone wanted, this is slightly more legal and fewer numbers than maybe some earlier years, but to explain exactly what the different bits of the council do. So it's a very good guide, but over to you, Emma.
Thank you, Councillor Fry. So the report before you has attached 2 documents. The first is the annual governance statement, which the council must approve every year with the statement of accounts for the preceding financial year. And the second is a new code of corporate governance. I'll deal with the code of corporate governance first. So we currently have one that's on our website, but it hasn't been reviewed for some time, and there are some things within it that are not necessarily reflective of the way that we work and what we do in terms of governance. So looking at best practice and looking at the guidance that's there from the Local Government Association in terms of the Improvement Assurance Framework, and also learnings from other local authorities, a new code of corporate governance has been produced. Essentially, the document sets out how the council makes sure that it's adhering to good governance. That's not just about legal compliance, it's about how we ensure that we're doing things the way that we say we do them, how we're delivering against our strategies, how we're delivering engaging with our communities, and how we serve the public. So the Code of Corporate Governance is there to set out how the council is going to do that and offer the framework for officers in terms of how they're going to go about doing their work. It then is the document against which the annual governance statement is assessed. One of the main changes between the previous Code of Corporate Governance and the one before you is that it's based on the principles within the SIPFA guidance. Previously, we had 5 principles that the corporate Code of Corporate Governance was set against. The SIPFA and SOLIS guidance, Delivery Good Governance in Local Government Framework, sets out 7, and it's against that Code of Corporate Governance has been refreshed and then on which the annual governance statement has been based. Just in terms of the annual governance statement as well, it does set out some key things in terms of the statutory roles of officers, and also summarises things such as the role of audit and governance, the role of scrutiny, etc. So it's almost like a sort of encyclopedia of how the council ensures it's operating. We've then, off the back of that, looked at the annual governance statement and refreshed it. So it's a very different annual governance statement that you will have seen in previous years. We hope to develop it again next year and put other things into it. But essentially what it is doing is reporting against where we have achieved things and done things well, and celebrating the successes in terms of governance. It's reflecting on where we could improve things and putting an action plan in place, which at the back of the annual governance statement with owners against it, and it's rating our overall effectiveness in terms of adhering to governance and our corporate governance, Code of Corporate Governance. It also includes a statement from the internal auditors that's in there, setting out their opinion and essentially gives sort of an overview of what the council will be doing over the next 12 months in order to improve and develop its governance arrangements and its work in order to then report back to you in 12 months' time and say where we've come, what we've done in that period, and what we then look to do. So it's quite a sort of evolving document that will lead us into the next year. So that's really the overview. Both the documents are there for the committee to see. If you have any questions, I'll be happy to answer them.
Thanks very much. I see Susan online as, I assume, the cabinet member who has oversight of this. Did you want to say anything, Susan?
Thanks, James. Yeah, I was joining for this item. I'm exciting though audit and governance is. I was not necessarily planning on staying for the whole meeting. I mean, obviously, I think Emma's given a really good outline of the sort of important changes that have been made to the document this year, but I thought it was just worth picking out a kind of couple of issues that the annual governance statement itself picks up on. So firstly, the reference to the LGA peer review, which, you know, as we've, I think, discussed in a number of different committees, is a very important part of our governance arrangements. Obviously really important to get in some external expertise from other authorities to give oversight to many of the issues that we felt that we could do with some additional oversight on, and actually effectively governance and companies governance, which is covered in the annual governance statement, was one of those things. So we have already made some changes to our company's governance in light of some of the recommendations that came through from the LGA peer review. And obviously Emma's also having contact with the new chair of ODSL and ODSTL to talk about further changes that we might make. I think the other really key ones that I wanted to pick up on were around the housing temporary accommodation. Obviously, in common with every other authority up and down the country, pretty much, that provides housing, we are really struggling at the moment with temporary accommodation. I think it's worth noting that we have actually been praised by central government for our role in tackling some of the major problems that we have in terms of temporary accommodation. And I think this is a good reflection of where we are, which is trying to do our best within the actions that are possible for us to try and mitigate the really very high pressures. And I think that is probably where I'll leave it, other than to say that the statutory assurances and controls obviously are there to make sure that we don't have any issues with any of the senior people in senior roles within our organisation, the monitoring officer, the head of paid service, section 151 officer, etc. And just to say that, you know, the document, as the document states, we do not, and they have nothing to report to us of any major concerns either, which is obviously reassuring.
Thank you very much, Susan and Emma. Are there questions from the committee members here? Simon?
So, I'm not sure which document I'm looking at. The governance statement, the strengths and what's the other heading, and what needs attention. That's something we've written think of ourselves, but also got from other people's views of ourselves. Is that true to say? It's a combination of both those things.
So it's obviously taken from the peer review, and that's fed in this year. Ordinarily, the annual governance statement is the council's reflection of its own governance arrangements and performance over the financial year that it relates to. But obviously this year we have got feed-in from the peer review as well.
And the action plan, it doesn't have, so it says 24-25, but doesn't have, only a couple of the things have got sort of months on them. We're halfway through that year. Is how much of it has already been done, or would it be helpful to have like dates for when some of these things might be done by, specifically within the year?
Yeah, absolutely. There was a little bit of sort of delaying getting to the point where we had the action plan, so we've not managed to put dates against it. What I'm hoping to do is, once we've got it approved, is develop that further with CMT, get dates against it and get an action plan against it. Some of them are already, for example, covered in other action plans. So we have a action plan and schedule of policies that are going to be reviewed, and so some of the things that are within this action plan are also being monitored within other action plans. So this is bringing together different strands, but we will be looking to for next year include dates against them, but also update this table for when we report with an update to audit and governance.
Any other questions? I have one which was being raised among us as we were waiting. Could you define intelligent clienting?
It is.
I'll let you go first.
It's clienting with the. So there's two elements to it. There's understanding the entity that you're clienting and their demands and the pressures upon them, but it's also understanding it from the council's point of view and what we need to do as a client to get the best outcome from the council, for the council in terms of being service provider. So it's about sort of looking at that relationship with our wholly owned companies and perhaps just not resetting, because it's not necessarily that there's anything wrong with it, but perhaps rebalancing it and making sure there's a clear distinction between the times that we're acting as a client versus the times that we're acting with other hats on, and making sure that we're aware that we're acting as a client, if that makes sense.
Makes sense to me. I think I would add what I think it isn't. What I think it isn't is having a very, very rigid client-contractor arrangement, which means that every last decision has to be taken through a sort of a prism of that sort of structure. And equally, it's not having such a laissez-faire arrangement that there is no client relationship at all for the contractor. So I think it's trying to have a relationship is actually the issue is so that you can talk things through, so that it works well for both sides. That's kind of how I describe it.
Simon again.
Can you give some examples then of when we are definitely the client and when maybe we're not?
Well, I mean, for a large amount of housing repairs, for instance, we are the client to ODS as the contractor. So that is definitely one of the ways in which we would be a contractor. I guess, sorry, a client, I beg your pardon. I guess if they were doing work for somebody else, then we would not.
Thank you.
Sorry, I'd agree with Councillor Brown. So we're clienting where they're providing services on behalf of the council, for which the council is paying. But obviously, ODS do more than just provide services for the council through their traded arm. And when it's those elements of their business plan, for example, and their development, that's not something that we client. So there is a clear distinction between the two.
Thank you. Seeing no other hands, I have one question, which is maybe personal, because I don't think anyone else here is on the finance panel. But at the finance panel, we did have a special meeting to discuss ODS, actually, and it was particularly focused on executive level pay. But that's not the point. We scrutinized it, I believe, and it says just above the mention of intelligent client about scrutiny panel, scrutiny committees agreed that we as finance panel will look at decisions, forthcoming decisions, and then there's a standing invite. I was wondering, I'm not sure I'm actually free, about coming from the finance panel to the next meeting of the company's shareholder meeting. But I notice there are 3 people nominated as non-cabinet members who are there, 3 councillors, but none of them is on the finance panel. And I just wonder, it is slightly odd to scrutinise something and then not be invited along when the discussion takes place among the shareholders, or the shareholder. So I just wonder if that's an omission because it mentions improvements planned or in progress this year. That was rather personal request, but it seems slightly odd.
So that is, unfortunately, I think things came to scrutiny at rather shorter notice than we were hoping with the first report. And it was probably not one that we were hoping, we'd hope for something a little bit less in depth. So there is an amount of work to do in terms of amending the terms of reference for the shareholder panel, which then will look at having, similar to Cabinet, that attendance from scrutiny to give its comments and in report. So that is something you're quite right, it does need looking at, and it will be looked at imminently.
Thank you. As I say, it's rather personal, but still it seemed useful. Any other questions, comments? Otherwise, we are being asked to approve the annual governance statement, approve the new code of corporate governance, and then note the action plan and delegate authority to you, Emma, to make any typographical changes so that what is published is absolutely perfect. So anyone against? Are we in favour? Please show. I see everyone's in favour. Thank you thanks a lot, Emma, and Susan for coming along. You're welcome to stay for the next item if you would like.
A very kind offer, but I think I might leave. So thank you very much.
Okay, so we'll turn now to what's on our agenda item 6. And I suppose I should invite Adrian to kick off in terms of the council and the group audit planning report. So Adrian, over to you.
Yeah, thank you, Chair. So this is the annual audit plan for 23-24 for both the council and the group. So we'll just take the committee through a couple of key points, and then I'm happy to take any questions at the end. So if I start with page 378 and 379 of the report, really just sets the context of what we've been talking about. So the reset, recovery, reform agenda, which is currently obviously high on everybody's minds in terms of trying to work through the backlog, but also importantly moving forward into 23-24. On pages 380 to 382, we then touch on and summarise the significant risks we've identified as part of our audit. We also have some inherent risks in there, so we'll just take the committee through those at a high level. So we have misstatement due to fraud or error. This is kind of a prevalent risk which we see in all of our audit plans, and is one which the committee and those members of the committee who have been here before will be familiar with this particular risk. We then have another specific fraud risk, which was around incorrect capitalisation of revenue expenditure to manipulate the revenue outturn position, and that can be done through either capital additions, so incorrect capitalisation of additions, or also through revenue expenditure funded from capital under statute. Another significant risk we have identified is around the valuation of land and buildings. So again, this is another risk which has been on previous plans. Again, the risk there is really around a change in assumptions, and a particular incorrect assumption could have a kind of material impact on the financial statements, especially given the highly material numbers involved within specific elements around fair value valuations around investment properties and other assets subject to annual valuation cycles. We then have on page 381 another inherent risk, or an inherent risk around pension liability valuation. Again, this is specific to the pension fund and the relationship with the Oxfordshire Pension Fund. And again, there's a number of different specialists and inputs and assumptions, which again could lead to a material error if any of those were kind of incorrect or incorrectly applied. At the bottom, page 381, we've then got an inherent risk around the group consolidation position. The council has a large group structure, and again, there's a number of different procedures, and I'll come on to some of the different specific elements of the group further in the report in terms of what that means for our materiality considerations and some of the relationships we have with some of the auditors of the group subsidiaries. On page 382, we've got a couple of different new areas of focus. So one is around IFRS 16, which is a specific standard based on leases. That's due to come in from the 1st of April 2024. So not specifically relevant for the 24-25 audit from the point of view of the implementation of the standard, but officers do need to kind of work through an impact assessment in terms of what that looks like and what that may mean for the council, and then they'll need to disclose that within their draft 23-24 accounts. And then at the bottom of page 3.2, we have an inherent risk just around minimum revenue position and what that might mean for the general fund in each financial year. Again, it's just becoming something that's becoming more relevant within, or more prevalent within, local authorities, just due to the focus on some of the Section 114 notices. So again, that's an area of focus for us for 23-24. In terms of page 3 of the report, we talk about the materiality and the concept of materiality. So we have a headline materiality for both the group and the council. That's currently set at 2% of gross revenue expenditure for each of those different elements. We then have a performance materiality, which is the middle element there, and that's currently set at 50%. That 50% is impacted in essence because of the disclaimer from previous years. So if effectively we have two options, one is a 50% threshold or a 75% threshold. And as we work through kind of removing the disclaimer over the next few years, this threshold will become important, because if we move up to 75%, it just means we're taking more assurance from the prior period. And it also means obviously that we're testing to a higher element, which obviously means less sampling for Bill and his team. And then the last column on the right hand side, we've got our audit difference threshold. So again, this is set at 5% of our planning materiality. And this is generally where we report back to the audit committee in terms of any uncorrected misstatements, which the council have decided not to make and which have been identified as part of the audit. Just a couple of other quick areas in terms of the report. So page 3 we talked there about the approach. So again, the approach is consistent with what we would previously have done. So it's a substantive approach. So we're not testing controls, we're testing balances, but both month 9 and month 12. We believe that gives us the most efficient approach for delivering the audit, and especially moving through now with the backstop dates, is really important that we have a really efficient approach to kind of make sure that we're kind of issuing the audit opinions well in advance of any particular backstop dates. Page 386 just talks you through the strategy. At the bottom, we've got an update. So we've got Andrew Britton coming in as the partner. I'm continuing as the senior manager, and then Preeti Malik is the manager, kind of liaison with Bill and his team on a day-to-day basis. Page 409 is just relevant, I think, just to kind of just want to bring to the committee's attention just in terms of some of the specialists we use. So again, consistent with prior years, we'll be using our internal valuation specialists, and we'll also be using our internal actuarial specialists to give us assurance over the pensions. Page 411 of the report talks you through the timeline, and again, importantly, just with a reminder of the backstop dates and what that now means in terms of delivery of the audits. So currently, as Bill said, we're currently working with him and his team to kind of work through a number of areas of substantive testing with the review to kind of then making the backstop date before the February deadline. And again, the backstop date changes over the next few years to effectively come back towards November time. So again, it would be kind of a efficient approach each year to try and make sure that we're actually kind of getting back to where we need to be in terms of working efficiently with both teams. And then 413 and 414 just touch on our independence, and we just report that we don't have any independence matters that we need to bring to the attention of the committee. So I'll stop there and take any questions on the report.
Thank you very much for covering a lot very quickly. Maybe I can kick off with one thing which you mentioned more than once as you go through it. Materiality. Can you please explain for people who are not accountants and not familiar with local government accounting, what is the significance, number one, of planning materiality, which I don't think has changed over the years, set at 2%, and then performance materiality, and how does it affect what the council does?
Yeah, so to start with the concept of materiality, so when an audit opinion is given, effectively, we don't audit everything to the last penny, for example. So there's a concept of materiality determined, and the concept of materiality is kind of all of the audit firms apply different ranges, but the ranges are kind of within very specific thresholds, which are kind of generally agreed with the Financial Reporting Council. So effectively, when an opinion is given, it's saying that based on the size of the entity, and the 2% threshold would be relevant to different sizes of entities, but would also mean kind of the work would be relative, and you would have a relative sense of opinion. So effectively, when we set our planning materiality, which is your 2% threshold, what that means is we then look at all of the different elements of the financial statements, and then we designate each element of those as either significant or not significant based on that planning materiality threshold. So your 4 million threshold is your starting point effectively for us going through your income statement and your balance sheet and looking at all the accounts and saying which ones are under that threshold or over it, and actually they then become significant for the audit. If they then become significant, we then need to do a number of items of testing on those, and some of them are kind of more detailed than others. But effectively, that threshold then drives the planning materiality and then the performance materiality. Obviously, we have a number of statistical tools we use, and when we put those numbers into those tools, they would then return a number of samples. And obviously, with the 50% threshold, the samples would be higher, because essentially what we're saying is that we may have higher risk on the audit. And ideally, we would like to get back to the 75% threshold and we've used that threshold in the past for the council, so it's not something that would be unusual. So over the next few years, as we kind of move out of the disclaimer and into rebuild and assurance, we would want to try and gradually build that threshold up. So again, we've got 2 thresholds we can use. One is 75%, which would be the higher one and would be deemed to be lower risk, or we've got the 50% one, which is the lowest one we can use. So hopefully that kind of gives other members of the committee a bit of context for materiality. So effectively, as I say, we're not looking at everything, but it gives us a guide and a basis to kind of move through the audit and effectively give you the level of assurance that we think you need as a committee to kind of say that the financial statements, and going back to Councillor Gant earlier, it was kind of how do they know that everything in there is kind of as it should be? You know, when we give our opinion, we're effectively saying that the balances are free from material in the statement up to the value of the materiality. We do have areas where we could have a lower threshold, for example. So I know there's areas of the accounts which are more sensitive. So you could have exit packages or senior officer remuneration. Sometimes they can go down to as low as £5,000. But again, that's up to officer discretion and kind of auditor discretion to kind of do that. And again, if we were going to do that, we would kind of come back to the committee and report to them in terms of any particular areas which we felt were more sensitive and needed a kind of lower consideration.
Thank you. I mean, just to put it in words, I'm looking at your page 401, which is all about materiality. So you can have specific materiality. You gave the example. It could be remuneration, redundancy packages, whatever, could be much lower. That's a one-off.
Yeah.
But in terms of selecting where you focus your auditing gaze, anything above 2.2 million in this example would be identified. And when it goes up to 75%, it would be 3.3.
That's right. Yeah.
Therefore, you are not covering quite as many areas of activity. Is that correct?
That's correct, yeah. So effectively with the lower thresholds, if you exclude the disclaimer current position and we were going through a normal audit, the 50% threshold also is important because effectively it's our consideration of our expectation of errors within the financial statements. So if you were a council who was moving through a particular difficult period and we'd identified large material misstatements in the prior year, accounting standards almost say to us that, you know, the expectation, if there's a higher expectation of errors within the financial statements, we would use the lower threshold. So again, it's kind of a risk assessment for us to say, do we expect a large number of errors within the financial statements? And does the control environment, importantly, prevent and detect material misstatement?
Thank you very much. Are there questions from other committee members? Simon.
Could you go back to this IFRS 16 leases and explain that again a bit more slowly? Because I didn't follow that, because it says there's a risk and it's a new area.
Yeah, so it's a new standard which is coming in from 1st of April next year, so 2024. And effectively, It's just a different categorization, and leases basically coming onto the balance sheet. So effectively, the council will have a number of leases within various departments. This has been in train for a few years. It's been deferred because of COVID. So there's been lots of kind of guidance and training done on this, both within the sector, but also kind of within us as firms as well. So effectively, the first consideration for the council is, do they have a reconciliation or a really good understanding of the completeness of the leases that they currently hold? And then once they've understood the nature of those leases, there's then a calculation that would be done effectively to kind of recognise a right of use asset and a right of use liability. And that would then come onto the balance sheet, both as an asset and also an offsetting liability as well. So it's quite a technical accounting one, but the biggest consideration effectively for the council is, could they demonstrate that they've got complete records in place for all of the leases that they currently have out in operation within the various aspects of the business?
Any other questions? If not, I have two, but I don't think they're too difficult. One is, you show on page 411 your timetable, and we're already almost in November, and are you already going through substantive testing, and are you on track to meet our deadline?
Yeah, so we're currently doing the substantive testing, and the fact is that because this year is slightly unusual from moving in through, normally we would do an interim and a year-end audit. This year, because of the backstop date and various other things that are going on, it's much more condensed timeline. So yeah, the samples have been picked, and as I say, Preeti's working with Bill and his team, and there's been a number of meetings with both Andrew and Preeti, Nigel and Bill, to kind of really kind of work through areas and particular timeline issues or pressure points, and how they might work through those as a team. So yeah, that's ongoing, Chair.
I note that our next meeting is on the 20th of January, which is partly because we have finance panel and budget panel in the meantime, which is great fun. But I hope everything will be able to be presented to us then, yes?
Yeah, there'll certainly be a substantive draft audit results report come to that committee, yeah.
Then the last question, I was just trying to understand. I wonder if there's a simple mistake in the heading. Page 420, and Appendix C, scoping the group audit. And I can see this is the consolidated group, and you have a column called gross expenditure. The next column is called loss before tax. Is it loss? I didn't understand why it's called loss before tax. You go through the components of the group. Gross expenditure, nearly 70% is the city council. I can well imagine that. 21% is ODSL and so on, fine. And then you have loss before tax, and about 96% is the city council that has 91% of the assets. Is it profit before tax or what's going on? I know we often I have confusion when you have brackets. Sometimes they're profits, sometimes they're losses. That's already confusing, but I cannot believe this is loss.
I'll have to come back to you on that one, Chair. It could well be that it's the outturn position for the particular year in question. That would have been set using the 23-24 outturn. So I'll have a look at that and come back to you, and I'll send an email around to the committee if that's okay.
No, that's fine. It just seemed very puzzling because it looks as if the city council's making a mega loss, that's all, at least as a share of whatever is the total loss. If not, let's go on, if we may. We just note this report, so I hope we all see nods, we all note it. Can we proceed then to your next one, which is the value for money interim report, please?
So this, Chair, is the interim value for money report, which covers 2 financial years. So it covers the 1st of April 2021 up to the 31st of March 2023. It's called an interim report because effectively when the report was published, the guidance supporting the backstop position actually hadn't been legislated yet. So effectively when we produced the report, we wanted to kind of make it clear that it's an interim, because actually to move through to the backstop date for the period up to the 31st of March 2023, we would then need, as you said, we've gone through the delegated authority route, and obviously we'll then have to do a follow-up completion report, which would have the disclaimed opinions for each of those years within that final report, which you as chair will then sign off. So just to kind of put it in context, that's why the kind of interim is in there, and that will then be supplemented with a completion report, which we will bring through to the delegated position, which will include both the opinions for 2021-22, but also 22-23. There's just a few areas of the report that I'd like to kind of draw to the committee's attention. So as part of our value for money work, essentially we work against 3 sub-criteria. And if we go to page 439 of the report, you can see there that actually those are the 3 sub-criteria that we need to kind of effectively make an assessment on for each of the financial years in question. So the 3 reporting criteria we have are financial sustainability, and effectively that's around how the council plans and manages our resources to ensure it continue to deliver its services. Pleased to report there that we didn't have any significant risks identified, and then we didn't actually identify any significant weaknesses in arrangements. So there's 2 elements to the assessment. So you start with your risk assessment, and then if you identify a risk, you then move through to kind of determining if there's actually a significant weakness in arrangements. So on the financial sustainability position, we didn't identify a risk, and there was no significant weakness in arrangements identified. In terms of governance, so this is looking at how the council ensures it makes informed decisions and properly manages risks. So within this, we'd identified 1 risk, which was around the implementation of the new QL housing system. And again, as we moved through that risk assessment and looked, and obviously we're aware of the reporting position for the council, having attended this committee over the last couple of years, we did then conclude that actually there were significant weaknesses in the arrangement identified. And again, on page 468, we asked for a recommendation, or we raised a recommendation, and the council formally responded to that. In terms of the last area that we need to report on, it's around improving economy, efficiency and effectiveness. And that's really around how the council uses information about its cost and performance to improve the way it manages and delivers its services. And again, we didn't have a risk of significant weakness in arrangement identified. And again, there was no actual significant weaknesses in arrangements identified that we needed to report in terms of improving economy, efficiency and effectiveness. The report is quite detailed within each of those 3 sub-criteria. Then there is further questions. We provided commentary against each of those questions throughout the report. And again, I'm not going to go into the detail here, but I'm happy to take any questions on any of the content of the report if anybody has any.
Thank you very much. Any questions from committee members? I mean, the only one I had, but you flagged it up, of course, is it all comes back to QL, where we did have an internal audit special report on the ICT and the QL procurement process. I mean, I hope that we can be confident that this will not appear in the 23-24 value for money report. This report is essentially for whatever they call it now, but for central government, is that correct?
Well, this is part of our statutory obligations. So we've got, we need to give our opinion on the financial statements under the code, the NAO code. We also need to do a specific piece of work around the value for money conclusion. And this is the current kind of iteration of that with the 3 sub-criteria. So essentially when you see the 23-24 opinion, you'll obviously have elements of disclaimer on the opening balances, but you will see a specific paragraph or a couple of paragraphs in there on value for money. So that's kind of our formal output is the financial statement opinion, but also the value for money conclusion as well.
Thank you very much. I'm just trying to see, I imagine we're meant to note this. I'll just look at the agenda. Yes, to note and discuss the report. So thank you, Adrian. I don't see any hands raised, so I will take it that we're very grateful to you for both your long presentations. And we have noted this report, and we'll see you on January the 20th with the complete accounts, we hope, for 23-24 audited. So you'll have a busy Christmas, I suspect.
Yeah. Thank you, Chuck.
No, thanks very much. Okay, let's now turn on to, finally, there's several people on the call who are here kindly for the final items, which are both being presented by Gurpreet. First, the progress report, and then the follow-up report for the internal audit. So over to you, Gurpreet.
Thank you. So the first paper is the progress report. So I'll go through a summary of where we are, but then also summarise the accounts payable report. And then the second one, as Chair mentioned, is the follow-up. So on the progress report, we are reporting the accounts payable report to this committee. There are a few reviews which are currently in the process of being completed, but a couple of those I just wanted to highlight. So the first is risk management. That was intended to come to this committee. The report has been issued to management. I believe, and I've seen the vacancy, that the council were in the process of appointing a risk manager, and that person should come into post. And when they are, they can obviously take on board the actions. Otherwise, it'd be slightly unfair for the council to agree to things to somebody who hasn't actually joined yet. So once they have, they'll put their implementation dates for when they can do that. And then there's another review called called the dynamic purchasing system, which is no longer in the plan. And so it's to bring that to committee's attention, unless there's any retrospective objection to that. But there are good reasons, and I don't think it impacts particularly. So a dynamic purchasing system allows the authority to dynamically have potential suppliers onto frameworks, so you can access them quite quickly whenever you may need to procure services. And that was in the plan. However, that's been replaced with a review around fire arrangement assessments, which is a key area of concern and question for this authority. And we've got specialists who are working on that, and that was more imminent. The other thing that came alongside that is the government had a implementation date for October for the new Procurement Act, which would impact things like the dynamic purchasing system. That's now been moved to the 24th of February next year. And so actually it wouldn't really make sense for us to do work until after that date. So it naturally would fall into next year's plan anyway. So convenient at the same time, as well as needing to be removed for the other review. So I don't think that causes a concern. I'll move on to the accounts payable review, and then obviously you can take any questions on progress and that review at the same time. So the accounts payable audit, which is summarised in your pack, is a moderate opinion, both on the design and the effectiveness. There are 3 mediums and a few lows within the report. So within this review, just for familiarity for members, the council uses an aggresso system. It's through that finance system that payments are made to suppliers who supply services to the authority. And through this system, for the council, for the city council, purchase orders, goods receipted, and your invoices are all placed through that system. Through the companies, and as mentioned earlier by Catherine, when we're doing some reviews, we will also look at transactions for the company as well, where relevant. And this is one of those reviews where they also have other systems, one referred to as Key 2, where they will place purchase orders onto that system. And so Horsepath Road and Cowley Marsh both use this, goods receipt and invoices, but they won't make payments through that system. They will then send a batch file to the city council, who then actually make the payment to those different suppliers. So it's just explaining that for context, that our sample did cross over both the city council and the companies in this case. So we did find lots of good practice in that the constitution for the council was updated in November 23, and linked to that are financial regulations and policies that are in place as well, that outline what should be expected in terms of approval. And there are lots of local documents as well in place that also outline what are the expectations for approval for accounts payable. There are new supply processes in place, and again, we're happy with the policies and procedures broadly with those in terms of new supplier forms. It can be a key area of potential fraud, and how those should be documented. In terms of areas for improvement, however, there are 4 key areas here that I'll outline. So one, we do find areas where either POs, purchase orders, are raised retrospectively. And so just to explain that one for members who may not be familiar, an invoice comes in from a supplier like BDO and we'll say, can you please pay us for our services? Ideally, there's a purchase order before. So the budget holder has said, yes, we are pre-approving effectively that we're expecting this much to come through. That should precede our invoice coming in, and that's a good control measure. And this was more so with ODS rather than the City Council, I should say that. So there were retrospective ones that we're seeing there. And so we're asking management to focus on some of those areas. And there were some other individual circumstances. So I will be working with Yasmin, the manager from BDO, to do an extended follow-up of that testing. A few other areas were around management reporting. So in a previous version of Aggresso was updated a couple of years ago. It would automatically run KPI reporting to give the council information. That functionality no longer works and hasn't worked since that date. Management are working towards setting up something, but it's a control that we believe should be in place. And the last couple of points are around new supplier setups. We're broadly actually happy with this. There is a medium finding here, but there were a couple of cases where rationale behind some suppliers who were rated as high risk wasn't recorded, and that should have been recorded. And then the last one, which is a key one, is the reconciliation of the Aggresso system to the income system within the authority. There are some challenges around that reconciliation, which management are currently looking into trying to resolve. And so that's what's driving those 4 mediums, using external audit language, although it's not internal audit world materially, if you like. Thumbs up, we're broadly happy, but there are some areas there, particularly around reconciliations and the KPI reporting, and some of those transactions where we're not seeing POs before the invoice comes in are where that areas for improvement are required. But as you mentioned, Chair, I think there are members of management from that team here who may be able to provide some more information on that.
Thank you very much. I mean, first going to ask if Nigel would like, I mean, I don't know whether we need to be in confidential session about the switch. I understand what Gurpreet said about in terms of the review of the work this year from dynamic purchasing system. That sounds right, but why you've put fire risk assessments there? Would you like to let us know? And then I'm going to ask Phil McGaskill, who's been very patiently there to respond to the various recommendations that relate to you, with deadlines not until January, but still.
Yeah, I think, Chair, basically it's an audit which this committee has before previously expressed a desire to sort of have on their agenda. Basically, I think when we set the plan at the start of the year, basically we couldn't fit it in. Basically, the DPS, as Gurpreet says, basically is every reason to take that off the agenda. Basically, for the reasons that's been given. Actually, I think this one can be fitted in basically. So I think that's all I want to say on that particular one at this point in time. Yeah.
Phil, would you like, you can see the list of recommendations, and you are the responsible officer pretty much in every case, so over to you.
I am Councillor Fry. Good evening, councillors and colleagues. I am, from May, I've been responsible for the team in question. And from May, I needed to familiarise myself with the process and how that team worked and how it functioned. Myself and the team leader, we've been conducting a review of our practices and how we work through and how we bring them forward. I actually found the review that Yasmin undertook to be in line with our thoughts in general. Some of the recommendations that Yasmin was able to bring forward, we've been able to address quite quickly, and we're expecting to resolve them by the end of the month. Other recommendations, certainly around the areas of the reporting and the KPIs that are a little more complex, because my colleagues in IT need to provide the support from that. Some of the reporting was written by a consultant that we no longer employ in a manner which is quite difficult to unpick. But we have been working on it. Actually, I was hoping to be able to bring some resolution to that this evening to talk to you about it. But unfortunately, we've just fallen short of the line. So a number of the reviews we're hoping to finish by the end of October. There are a couple that we've put speculative dates in where we think we'd be able to finish them by January. But I'm really hoping that we can resolve all these issues before that date and be in a position to be in compliance with Yasmin's recommendations quite quickly, I expect. Does anyone have any questions on the recommendations and on the timelines?
We missed, you said you were hoping to meet Yasmin's deadline and then you remarkably froze. Could you just repeat the last, say, 20 seconds of what you were saying?
Okay, I'm sorry about that. We are hoping to complete and meet with all the recommendations by the end of January. A number of those recommendations we will be compliant with by the end of this month. And I'm hoping that with the aid of the report, really, I'll be able to bring more focus around the areas of the KPIs and hope to bring them on the line sooner than January.
So all being well, you would hope to have it by our 20th of January meeting.
Oh, I'm certainly aiming for that, Councillor Fry. It's my plan to do so. I was actually pleased with the recommendations that came out of the audit review. They were in alignment, really, with my assessment of what we needed to do to improve our practices.
Thank you. Any questions from committee members? Lois.
Thank you, Chair. Not really a question, but just to reiterate the first one, the first area of concern about the purchase orders not always been issued before the before the invoice seems to me, given that this is ODS and they've been going for quite a while, this seems like a fairly basic accounting thing. So I was going to request exactly what James has just asked, that actually, is it possible to bring that forward to before our next meeting so that we can, as a sort of priority, so that we can review it at our next meeting?
I am working on it, Councillor. The deadlines that I put into the original recommendations with Yasmin, they are my limits, really. So the recommendations that we have will be working with ODS and looking at their practices and trying to resolve the issues that we have outstanding. So I'm aiming to do that before we meet again.
Okay, all right. Well, we'll keep our fingers crossed.
Yes.
I can see Simon's hand is.
This is a question for Gurpreet. So that it seems like they're agreeing with everything pretty much. Are you confident that they are going to be able to get all these things changed in this quite quick time? Or are there certain areas where you think it's going to be more of a challenge for them to change practices quickly?
And in that context, I always feel when it says this is for the reconciliation between Paris and Aggresso, the council is moving in late November to Civica pay. Normally, IT things seem to be delayed. Do you think it is reasonable to assume that that will be done also by, in fact, in that case, by New Year's Eve?
I might have to slightly defer on this one in that I think it probably is more relevant for management and yeah.
Nigel, you respond, please.
Yeah, for my pains, Chair, I chair the board of Civica Pay implementation base or upgrade. It has been slightly delayed actually for reasons I won't go in now. The latest implementation date is the 2nd of December. And I aim to have that over the line by then. Actually, we're going to a change freeze shortly after that for a month, so I can't afford to have it hanging around basically. So yes, in answer to your question, it will be in by the 2nd of December.
Thank you very much. That was the biggest question mark I had. Did anyone else have any questions? Because it sounds as if you're all agreeing this was a very helpful review, and the recommendations, well, we'll hear all about them at our next meeting, which is nice to know.
Just check that you think they'll be that easily solved.
And I didn't say that. I think with both of those, they are actually quite technical things. Obviously, Nigel has far more knowledge sitting on that board, and even with the reconciliations and with what David had said about working with ODS, and there are some recommendations about can you click certain buttons on a software that could help the council automate some of these elements. These are very technical matters that it'd be wrong for me to give a confidence level on, unfortunately. So as we will, and as David has said, and Nigel, we will come back to the next committee. And if I echo some of David's confidence, whose hands up actually, so may add some more, they sound quite confident, but it would be wrong of me to say, because they're quite technical areas, and so it's hard for me to guesstimate.
So Phil, what do you want to say?
The estimates that I put in, Councillor Fry, are based on some of the work that has been recommended. We'd already made some progress along those lines. We'd already started to look at those areas because prior to the report, I had some concerns in those areas already. So I'm relatively confident of the timeline. With regards to Civica Pay, I work closely with Nigel on the board and on the implementation and on some of the problem resolving. So I'm fairly confident of the dates that I have given, but as with all things, there may be things that are unexpected that may pop up. But right now I'm sitting in an area of I'm quite confident I can achieve them.
That's what we like to hear. No, we will wait until January and see.
Yes, indeed.
Correct. Thank you. Well, I don't see any more hands, so I think as a committee we're meant to note this, and I see nodding everywhere. So thanks very much for staying with us, Phil. And now David Butler, who's been in the wings for a very long time. I'm sorry, but this is the final item, which is on the recommendations and the follow-up. And you're the lucky man who I think is responsible for these areas, the incomplete ones. Would you like briefly, Gurpreet, just to introduce?
Yeah, so this is our follow-up report, and apologies, I think I called you David a moment ago. So yes, this is our follow-up report, which follows up all the recommendations that we raise. Obviously, there are the complete ones that are outlined there, and we're happy with the progress on those. And some of those actually are a little bit longer standing, so I'm pleased to now say those around housing rents and empty properties that are on there are now complete. On the incomplete ones, I believe David's going to speak to the building control recommendation, so I won't say anything on those. On the others, I will add that whilst we are deeming them incomplete around selective licensing and data analytics, when you look into the comments, there is actually progress made on these, and so we're content that they are moving along, not quite in line with the original timelines here, but I on this one can say with more confidence that we should be in a pretty good position come the January committee on those. And I do note here, I think it says end of January for the data analytics ones. It's likely that we'll probably still provide a position statement on that for the 20th of January, looking at the progress that is being made on that. So I don't have anything further to say at this stage, and I think the building control ones, particularly David was going to comment on.
Yes, David, you've been patient. I mean, what did stand out is management didn't provide an update. That is what it says there, which is, of course, why it was important that we should hear how it goes. And I know we here are also very interested in selective licensing, which is another one of your areas. So would you like to respond and bring us up to date, please?
Yeah, firstly, apologies for for not responding. It sits with me, so I have no problems that I've come to the end of the meeting and feel it's a suitable penance. So building control is been in a series of sort of position of flux for a while, and what's exacerbated that is we've had further staff leave. So in truth, the situation now is we have one part-time member of staff that is an Oxford City Council employee, and the rest of the team are contractors. So that's made it very difficult to move forward on the activities that have been suggested within the audit that we had this year. I would note that in that first recommendation, A, B, C, and D, the management response to B, C, and D was that actually a lot of these are not necessarily going to be applicable for us. So building control policies do need annual review, but they're a technical document. So the idea of going to a committee or group wasn't appropriate. What we're doing currently is we're just realigning and restructuring the team somewhat. We've created a new post. So for those of you not familiar with building control and the situation nationally, the government has introduced some new competencies and qualifications for building control surveyors. We have historically always struggled to recruit building control surveyors for lots of reasons, but that's been significantly exacerbated by the previous government bringing in a new regime, which has led to roughly 20 to 25% of building control surveyors simply leaving the industry, which has rendered our recruitment and retention difficulties. It's really exacerbated those. So we've created a new role within the team that is a team coordinator, somebody who's going to sort of deliver sort of like a super administrative function within the team that won't be a building control surveyor. We have some really good opportunities for people to progress into that role, and they will be coordinating exactly this kind of work for us, as we simply don't have anybody to do that currently. So that's not just in terms of the policies, but work we're doing that with the ISO 9001, which is again a new bit of regulation that's coming in for us, and then really coordinating the work of the team. So we hope to go live with that job within the next fortnight, and have somebody in place very, very quickly, and then that will give us some capacity to work through some of these recommendations. So we've got a due date there that's been put in for January, and I'd expect us to be able to complete that well in advance of that date.
On the next one.
So the selective licensing, as I think we just said, it's just a case of we're working through. Sorry, I must admit I focused on the building control and didn't scroll down. Bear with me just a moment. Are there any questions about the building control one whilst I just read this?
I will look at the committee to see. May I mean, I suspect this isn't the right forum, but I will ask a question. I mean, the problem historically, and maybe the changes and the tightening up of qualifications, if you like, may mean that what I'm about to describe will be less frequent, but I was always given to understand that people can go anywhere, if you like, for building control. They don't have to employ the council. And people often set up maybe council officers on their own without overheads. And since the basis for your costings are public, they know it's on our annual budget. They can work out how to price it to be cheaper than you. I mean, I just wonder, do the new regulations mean that you're in a stronger position, or is this actually something where it will always be difficult for it to have a positive return to the council?
Unfortunately, it doesn't change that. You're right. We're in competition with the private sector, who don't have to publish their fees and also don't do what we would call like non-fee bearing work. So things like dangerous structures and various other really, really important things that the council has a duty to deliver but can't charge people for. So we're always on somewhat of a sticky wicket there. What we've done this year, we have a new many of you will know Gail Siddle, who is the Regulatory Services Manager. She retired recently, and we have a new Reg Services Manager in place called Courtney Bennett, who started a couple of months ago. And Courtney's recalibrated our building control fee structure. It's one of the first things she did. So as you'll see, as you get involved with the budget process, you'll see some revised fees for us. Some going up, some going down, but it's principally going up, but really based on the quantum of work, quantum of hours an individual job does and what it costs the council to deliver that. So we're trying to recalibrate that a little bit, but we'll always be on the back foot against the independent inspectors. Obviously, what the city council can offer is a greater resilience. We're not about to close overnight. We have had that recently with an independent inspector within the city boundaries, and many people like working with local authorities. So there is support for local authority building control. It's being able to balance that against the extreme costs associated with using contractors when there's such a small pool of available surveyors. It's a difficult position. So we're recalibrating our job descriptions. We're looking at the ways that we go out and recruit holistically. We have an apprentice in-house as well. So there's a real mix of growing our own, trying to do something different, sort of reshaping the team somewhat, giving us capacity so that we focus the sort of rare skills of inspectors, particularly the higher level ones, the sort of commercial and the higher risk properties, so they can go out and do the work that only they can do. So it's a right old balancing act to juggle, but there's some significant financial pressures that we're trying to mitigate against.
Thank you very much. And then no other hands up on selective licensing.
So just have a look at this. I think the one that's incomplete was a training analysis, and some of that does sit with the change that we've had within the team from Gail to Courtney, which is why we'll get that recommendation completed within the next month or so. But I think the other two have been completed by the looks of that. So one to cover off, which we'll do very shortly.
So selective licensing.
Oh, sorry. To be clear, that was selective licensing. There were 3 actions for selective licensing. A and B have been done. 3C, it happens to be a training analysis for the selective licensing team. So half of the team's done it, the HMO half haven't, but Courtney will lead that through and will ensure that it's done in time for 31st of December.
That's very good. Thank you very much. Any more questions for David? No? And then the last 2, one of which is high, is on data analytics. This is for Bill? Phil. Oh, Phil again. Sorry, yeah. Phil is there still. Thank you. Hello, Phil.
Hi, Councillor Fry. Me again, I'm afraid. Yes, it has got a high rating, and we have been looking at this constantly since I moved in. So we've been able to follow that recommendation, and we are looking to bring the reconciliation of the purchases made with the invoices and the receipts. By the end of next month, we're hoping to clear 2023. And then from then on, we will do a monthly reconciliation of credit card payments versus receipts. So it will be ongoing. It was neglected for quite a while, and it's taken the team probably a couple of months to bring ourselves back into a position where we can get to a monthly reconciliation of the card payments and the receipts.
But again, this is one where at our next meeting, you should be able to tell us you've achieved what you promised.
Yes, indeed. I spoke to my colleague who's leading on this earlier today, and she's expecting to be able to run monthly sorry, I've lost my train of thought. She's expecting to reconcile month by January. So we should be in a position to carry on from January onwards and reconcile every month.
That sounds very good.
I'm very pleased with the amount of work she's put in. It's been quite a long path to bring us to where we are now, but we are making progress in this area.
No, well done. So actually, our next meeting, all the recommendations will be complete.
Well,
hopefully so. I was just going to say on the data analytics one, hearing what Phil had said, is that I imagine for the January one, we should be able to give assurance over the 2023 and before stuff that has been cleared. obviously if there's a reconciliation for December, which happens in January, given that this meeting's on the 20th and papers will go on the 10th or so, depending on when that monthly rec has been done, because you've got to get all the receipts and the system transactions. If it's not done by the 9th, we won't better give assurance over that, but we should better say it's in place and actually all the prior year stuff is done. And we may close it on that basis anyway, but it's just to say we may not have had a chance to look at the monthly rec potentially by the 20th. There could be a slight timing issue.
No, that makes perfect sense to me as well. Once we get that in position, we'll be able to demonstrate that moving forward.
Thank you. I should ask Nigel, do you have any last words for us before you start thinking about budgets all the time?
No, I mean, yeah, that in I suppose just taking on board the amount of recommendations that have been made by internal audit throughout the year. There's an extremely low number basically that have been incomplete at this stage. I think that's testament of the way that we treat recommendations, made by internal audit across the board. And if you go back and read some of the reports around perhaps other authorities that have issued Section 114 reports, one of their main areas basically were internal audit and probably external audit being ignored basically, together with the Section 151. I'm pleased to say that that is not the case in this authority, and as long as I'm around, it will continue not to be the case.
On that very happy note, may we note the internal audit reports? I see nods everywhere. Thank you very much. I think we now have the pleasure of looking at the minutes of the last meeting, which look correct to me. Are there any corrections from any members here? If not, I give you many thanks, and we should note again the next meeting will be on the 20th of January. So I guess on behalf of, I know we'll meet before then, but wish you a Happy New Year in the meantime. Thanks very much.